Good evening, everyone, and welcome to tonight's webinar, Money Smarts for Dental Students Navigating Credit Reports and Scores. My name is Linda K. Tyler, and I'm the Director of Business Development for ASDA. I am pleased to welcome BMO as a sponsor of this programming. We're glad you've joined us this evening as we have a very informative and interactive presentation planned for you. During the presentation, we will allow time for you to submit questions via our Q&A feature. At this time, I would like to welcome Edwin Urbeta from BMO. Edwin?
Good evening, everyone. Thank you for having us here. As Linda mentioned, we're going to go ahead and go over credit scores and reports. Extremely important topic, and we're definitely going to go ahead and share that with you guys here, all the information. I've been in banking for over 20 years, and I'm going to share my screen with you right now. There it goes. Hopefully, everyone can see my screen. Yeah, today, who I have is I have a couple colleagues with me helping me answer any of your questions and helping with the presentation. I have Carla Caserjon, branch manager. I have Tyrone Deacon, practice relationship manager. Erica Levoyer, vice president, bank manager, and Rashir Soni, vice president, bank manager as well to help me with the presentation. During the presentation, if you do have any questions, please feel free to type your question into the Q&A and click send. Questions will be addressed in the order they are received. I have asked my colleagues to help me with the questions. So they're going to go ahead and monitor that and make sure that they help answer those questions as well. Okay. So let's go ahead and get started. The objectives today, at the conclusion of this session, participants will be able to gain a clear understanding of what a credit score is, why it matters, and how to read a credit report. Discover practical tools for maintaining a strong credit scores and strategies to improve damaged credit. Learn to identify warning signs of credit repair scams to protect yourself from fraud. Develop the skills to create a personalized budget plan that supports your financial goals. Okay, so let's talk about a credit score. What is a credit score? A credit score is a 3-digit rating that tells a lender how likely you are to repay a debt. Okay. Now, a credit score can go anywhere between 300 to 850. Now, if anyone has a credit score of 579, which is this one right here, that's considered poor. What you're going to notice is that you're not going to get approved for majority of the lending products out there. Now, when you start getting to the 580 to 669 credit score, you might notice that you're not going to get approved for certain lending products, but you might get approved for certain special lending products. However, with those special lending products, you might notice that there's going to be a higher cost and a higher interest rate compared to other lending products out there. When you get to the 670 to 739 credit score, that's considered kind of a good credit score. This is where you start noticing that you might get approved for certain credit cards, for example, but you might not get approved for all the credit cards. You might notice that you were approved for a credit card, and all of a sudden you try to apply for another one, and you notice that, oh, it got declined. So why is it that you got declined? A lot of times it has to do with the type of credit card that you apply for. Certain credit cards require a higher credit score versus other credit cards. I'll give you a perfect example: rewards versus non-rewards. A reward credit card then might require a reward credit card, which is a credit card that earns cash back or miles. Those are usually tend for clients that have a higher credit score. The non-rewards credit card, the ones you don't earn cash back or miles, those usually we have a lower credit score requirement, and that's probably the reason why you see those approved versus other type of credit cards that you don't get approved. When you get to the 740 and the 799 credit score, that's considered very good. At this credit score, you're going to start noticing that the bank might give you lower interest rates compared to other credit scores. You might start qualifying for discounts on your interest rates when you apply for lending products. When you get to the 800 to 850, that's considered exceptional. I've been in banking for over 20 years. And it's rare when we see people that do have a credit scores of 800s, and that's considered really good. When we see that, we know that the person maintained their credit score and they did a phenomenal job being able to keep that credit score up there as well too. Now, who determines your credit score? In the US, there are three credit bureaus. There's Experian, Equifax, and TransUnion. Now, depending on the model that they're using to determine your credit score, you're going to notice that you might have a different credit score with one versus the other one. It's not all going to be the same credit score consistently with all three of them. There's going to be, you're going to notice that they're different. If you see a huge discrepancy on your credit score from one to the other one, you might want to reach out to that credit bureau to see why is that the case. Is it because the fact that maybe perhaps a company didn't report your credit or your loan to that credit bureau, or is it because was there some type of fraud happening? So you're definitely going to want to reach out to them to see why is the discrepancy, why is it one is higher compared to the other one as well too. Now in banking, we don't know the exact formula that they're using to calculate your credit score, but we do know what they use to calculate credit score. And what they use is they use a couple factors. They use the amount owed. They use payment history. Now, the amount owed is basically how much are you using compared to your limits. For example, if you have a credit card of $10,000 credit card limits, are you using the maximum or using a lower percentage? Payment history. Are you making your payments on time, or are you 30 days late, 60 days late, 90 days or over late? Length of credit history. How long have you had your your lending products? Has it been more than 2 years, or has it been less than 2 years? New credits. Have you recently applied for credit cards? Have you recently done credit inquiries on your credit score? Types of credits. Fixed versus variable. Do you have just one credit out there, or do you have multiple lending products out there, multiple credits out there? Now, I do have a poll for you guys, and I wanted to see if you can help answer this question. Calculating your credit score, which of these has the greatest impact on your credit score? Would it be the amount owed, payment history, length of credit history, new credits, or types of credits? What do you think the answer is? We'll give you 30 seconds. All right, so 19% is saying amount owed, 45% is saying payment history, length of credit history 26%, new credit 3%, and types of credit 6%. So payment history, it is the number one. So really great job for those that say the payment history. Payment history counts for 35%, roughly 35% of your credit score. Amount owed goes for almost 30% of your credit score. Length of credit history is roughly around 15% of your credit score. New credits and types of credit is roughly 10% of your credit score. And the reason why we say roughly is because depending on the model that they're using. So really great job for those that said payment history, because again, payment history, it accounts for 35% of your credit score. Now, I'm going to give you a scenario here. Bear with me, I apologize. It's still showing. All right, so I'm going to give you a scenario here. The scenario is about two friends, Anna and Bella. Anna and Bella have been friends since middle school. They are both single, but both have steady income to pay for their bills. Anna and Bella decide to buy homes in their childhood neighborhood. Bella receives a loan without any trouble. Unfortunately, Anna has a difficult time getting a loan. When Anna finally gets her loan approved, her interest rate and her insurance premiums are higher than her friends. Why do you think this happened to Anna? Why? So I'm not gonna have a poll for you guys, but what I would love to see is you putting under Q&A Why do you think that this happened to Anna? Why do you think that Anna has a higher interest rate, higher insurance premiums than compared to Bella? So I'll give you roughly 10, 15 seconds to see what have you put into the Q&A. And then Rushir, Erica, or Carla, if you could do me a favor, if you could just go ahead and read some of the answers that they're sharing on Q&A as well too. Why do you think that Anna has a higher interest rate compared to Bella? What would be some of the answers?
So Edwin, I can start off. A couple of things that I noticed in the Q&A. What if you delay one payment for 15 days on your credit cards, and after 15 days you pay full amount? This will affect and then improve your credit score. Another one is probably Anna has a bad credit score compared to Bella. I also have Anna has lower credit score. She either give me 1 second. Keeps going down. She either doesn't have a very long history of credit or hasn't made payments on time. Other things can also be a factor that lowers your credit score. Another answer is lower credit score. Anna has a lower credit score.
Thank you, Rushir.
Yeah.
And that could definitely be a factor where Anna definitely has a lower credit score compared to Bella. That could definitely be a factor to determine why her interest rate might be higher compared to Bella's. Now, there are some other factors that could go into it as well, too. One other factor that can go into it is where perhaps Anna applied for a 30-year mortgage versus Bella applying for a 15-year mortgage. A lot of times when you apply for a longer term, that gives you a higher interest rate compared to someone that applies for a shorter term. Another reason why might be is because the bank, maybe Bella went to bank A and Anna went to bank B. Or vice versa. So So it could be for many different factors. So when you apply for a mortgage, when you apply for lending products out there, definitely shop around. Find out who can give you the better rate. Don't just go to your current bank and assume that they're going to give you the best rate possible. Take a look to see who has the better rates out there, and just go based on that as well too. Now I'm going to give you another scenario here. Anna just bought a new house, but it's further away from home, from work, than her old apartment was. She needs a new way to get to work. She would like to purchase a new car. She has taken some steps to improve her credit and is now eligible for a car loan. Anna wants to use the loan to get a new car, but she has a problem. She needs someone to co-sign. She decides to ask her friend Bella for help. I'm going to give you a poll. Should Bella co-sign a loan for Anna? Yes or no? Chris or Linda, if you can put the poll out. So 10% of you are saying yes. 90% of you are saying no. So what I would say to this question is there's really no right or wrong answer. I'm going to give you the pros and the cons. Obviously, if um if if Bella decides to go ahead and co-sign for Anna and Anna makes payments on time, then that's definitely going to help both of their credit scores. However, if Anna does not make a payment on time, then that's not only going to impact her credit score, it's also going to impact Bella's credit score, right? There can also be some other factors that can negatively impact Bella. For example, what if Bella decides that she wants to apply for a car loan on her own? Could the bank potentially use the card that she co-signed with Anna as a reason for them to decline the loan for a new car loan for Bella? The answer is yes. For DNI, for debt to income ratios, there are ways where the bank will go ahead and remove it from their debt to income ratio, but that's something conversation that Bella would have to have with the bank. So yes, there are pros and cons for co-signing with someone. Now, one thing I'm going to tell you is that you might have family friends that might ask you to co-sign. Always think about what could be the consequences if you do co-sign for someone as well too. So keep that in mind. Now, your credit report is a snapshot of your credit profile, including your credit history. Credit reports help lenders such as financial institutions understand how creditworthy you are. That is, whether you are likely to repay a loan if given one. Okay. Now, you could get your credit reports. You can go to annualcreditreport.com and request a credit report of your own credit reports. Now, the one thing I'm going to tell you is that the one you do request with the annual credit report doesn't show you your credit score. It does show you your credit history. You can also get a free credit report in cases of reported fraud if you need help to apply for welfare or if you are denied a loan or credit application as well too. Now, what you can do is you can also request a credit score from the 3 credit bureaus, TransUnion, Equifax, and Experian. If you were to request a report from TransUnion, Equifax, or Experian, there might be a cost associated with it. Just keep that in mind. And obviously, there are online sources where you can check your credit scores for free as well too. Now, when you do request your credit reports, a couple things I'm going to point out to you. On the credit report, what it has information about public records. So it has any lawsuits, any bankruptcies, any judgments, any delinquent or unpaid taxes. It also has your personal information, for example, your name, your birthday, social security number, your address, the name of your spouse, and the name of your employer. It has your credit accounts, your debt status, your open and close accounts. And then it also has any inquiries that you have done in the last 24 months. Now, if you do request this report, this is not a report that you're going to want to just go ahead and tear apart and throw in your garbage. The reason why is because if anyone gets a hold of this report, it has so much sensitive information that they can do fraud against you. So just keep that in mind. This is a report that if you're going to want to go ahead and get rid of, you're going to want to shred it properly. Okay. Now, how to dispute an item on your credit report. Couple things. One is you're going to want to write a letter to the credit bureau, to the credit reporting agency. Send a letter by certified mail and request a return receipt. Or 3, send an additional letter to the information provider. So, if you notice that a certain lender reported something on your credit reports, you can definitely reach out to them and let them know that there's something showing up on my credit reports and you would like to go ahead and dispute it. So you can definitely reach out to that lender, okay? New credit reporting bureaus are obligated to respond to you. Usually within 30 days, they have to make sure that they do reply to you guys. Now, credit repair scams. To improve her credit, Anna researched several credit repair companies. The first company promises to remove bad credit information from Anna's reports. All she had to do is pay up an upfront fee. Anna is worried about her bad debts, but the company assures her that it can scrub all negative information from her reports. The company also advises Anna not to contact the credit bureaus directly, since doing so will negatively affect the company's efforts. Based on this scenario, what do you think? Do you think that this company is a legit company? Do you see anything in here that could potentially be a red flag? If you guys can do me a favor, put something in Q&A. Let me know if you see any red flags in this scenario. What do you guys think? Do you see any red flags that could potentially tell the Anna that this might be a fraudulent company?
Edwin, paying a fee up front. We're getting a lot of fees.
Paying a fees up front. I love that one. That is definitely one of them. A company that's supposedly is helping you repair your credit scores. By law, they're not allowed to charge you a fee up front. A couple other ones that you see here is Anna is let's see here. What else do we have here? When they say all negative information, they cannot scrub all negative information. If you are actually the one that did the actual negative transaction, then they cannot scrub those off because those are legit transactions. Another one is when they ask you, when they advise you not to contact the credit bureaus, that's a red flag because you are allowed to contact the credit bureaus yourself as well too. So when you start hearing things like don't contact your bank, don't contact the credit bureaus, those are red flags. You should be able to contact the credit bureaus and you should be able to contact the banks or the lenders. Now, here are again some of the red flags. Request to pay upfront fees for a credit repair service. As I mentioned to you earlier, they're not allowed to charge you upfront fees. They're only allowed to charge you a fee once they have solved the issue. A promise to scrub all negative information, a promise to scrub or alter legitimate information, a warning not to contact the credit bureaus directly. You are entitled to dispute errors for free. It is your legal rights. Okay. Other signs of credit repair scam: asking for a signature on blank paperwork. Don't ever sign a paper that is blank. Credit profile number scam. Fake social security number scam. There are some companies out there that are going to ask you, just go ahead and apply for, or go ahead and get a fake social security number. If they start saying things like that to you, or if they start saying things like apply for an EIN number, that's not a legit company. They're not supposed to be saying things like that to you guys. Now, if you do find yourself that you want to contact a company to help you with your disputes, look for companies that are accredited with the National Foundation for Credit Counseling or the Financial Coaching Association of America. When you start looking at, so take a look at organizations that are associated with them as well too, and they're gonna be able to provide that service for you guys to help you dispute some of those transactions. When it comes to debt, what those organizations are going to do is they're going to help you create a financial plan to help you pay off some of that debt. One of the biggest budget plans is the 50-30-20 plan. This is a well-known budget plan that a lot of financial institutions talk about. The 50% being able to, based on your salary, paying 50% on your needs, 30% on your wants, and 20% on your savings and debts. I'm not going to talk about the budget plan. What I am going to talk about is the savings and debt feature here. When you're talking about debt and how debt has a negative impact on your credit score, when you're paying off your debt, that's helping you build your credit score. That's helping you, lowering your debt might be helping you build your credit score even higher. So keep that in mind. As you're creating a budget plan, as you're creating a financial plan, think about the savings feature, think about the debt feature, paying off additional beyond the minimum payments, paying off additional principal to lower that debt for you and potentially increase your credit score. Now, when it comes to your credit score, who has access to your credit score? Credit card companies and other lenders, cell phone companies, rental properties, Utility companies, employers in some states have access to your credit score. Government assistance programs, government license, auto and home insurance companies, they all have access to your credit score. So in the future, if you're applying for a company, keep in mind that in some states your employer does have access to your credit score. You might be looking forward to lease a place. Those they're gonna want to ask for your credit score, and they might deny you the place based on the fact that your credit score is poor. So keep that in mind that this is how critical it is to have a really good credit score for you for employment acts for employment in the future, and for you to be able to rent a place and or lease a place as well too. Strategies to improve your credits. Now, a couple of strategies is use less than 30% of your available credits. So if your available limit is $10,000 on a credit card, hypothetically, one thing that we ask you to do is use less than 30%. So using less than that $33,000 is what's going to help you build your credit score. Okay. Do not max out your credit cards. Pay your bills on time. Pay off your credit card bills each month in full if possible. Pay off your loans on time. Do not apply for multiple loans and credit cards at the same time. Make a financial plan or a debt management plan to reduce your debt. Create and follow a monthly budget. Review your credit reports for accuracy. In banking, not all the banks offer this, but in banking, some banks offer a secured credit card. Now, what a secured credit card is, this is a credit card to help people that have either no credit score or poor credit score. I'm going to ask Carla. Carla, you out there? Can you please do me a favor and go over what a secure credit card is? Carla, you might be on silence. Unmute. Okay, so Carla cannot remove herself from mute. Erica or Rashir, do you mind going over what a BMO, what a Boost or a secure credit card is?
Yeah, I can kick us off. So here at BMO, we offer a Boost secured credit card. And what this credit card is and does for you is it helps you to build credit. So what we do is we take a deposit. So let's say $300, right? We take those $300 and we put it into a savings account. So not only is it helping you to build credit, but it's also helping you to save. Now, with that being said, there are several other benefits that come along with the card. For example, self-fund protection, right? So like Edwin had mentioned earlier, depending on your credit score, cards are going to have different features. And the good thing about this card is typically when you apply for the card and you keep a good payment history, within 6 months, you're going to see a good score. A fun fact, in order to buy a house, you need 3 lines of credit, right? So it's always good to think about, how you want to better improve your credit for your future. Rashir, I don't know if there's anything you want to add.
Yeah, thank you, Erica. You're spot on. So it's one of the best credit cards that we have to build credit here at BMO. I work for one of the branches in the northwest suburbs, and we have helped a lot of clients here help improve their credit. And it's great to see them, have a credit score finally when they have no credit before, right? And it starts as minimum as $300, everyone, and it goes to however much you want to put into that savings account. So we basically open up a secure savings account. We use that as a collateral, like Erica mentioned, and we use that for the credit line, right? And you can always request that an increase in between the time, but we start off at minimum $300 to get you started with helping you build credit. And you can we offer what is called, BMO Credit View as well, where you can see online on BMO's website or online banking to see and track your credit, right? And it's as simple as starting off with $300. So it's one of the best cards that we have here, and we have helped a lot of our clients here at BMO. So, Edwin, back to you.
Thank you, Erica. Thank you, Bashir. At the end of the presentation, what I'm going to do is I'm going to provide you with Erica, Carla, and Bashir's information. If you notice that your bank doesn't offer something like this, please feel free to reach out to them. They'll be glad to provide you additional information about it as well, too. In addition to the BMO Boost Secure Credit Card, something that we do have at BMO Bank is we have Practice Solutions departments. So for this one, I'm gonna go ahead and ask Tyrone to give us additional information on what he does within his department and the dental industry that he works with as well. To Tyrone.
Yeah, thanks, Edwin. So all of you students, when you're getting a little older, you graduate, you're an associate, at some point you're going to need to buy a practice, start a practice of your own to make a little more money, to pay off all those student loans. And the start of this process is, again, goes back to your credit score. I think Edwin mentioned before, like 670 to 750 is a good credit score to start getting, credit cards. At this level, you're probably going to need to be above 700. So this is why it's a really good thing to start building your credit now, getting those credit cards, making payments on time, because at some point you're going to need to buy a practice. And that's where I kind of step in. That's all I do is help younger associates get into a practice of some sort. So again, it starts with your credit though. If you don't have that credit built up by the time you're ready to build a practice, you're not going to be able to buy one. So you can kind of see on the screen some of the things that we do here at BMO to help you, whether it's start up a practice, buy into a practice, take over a practice, second location, you name it, we'll help you with that. But like Edwin and some of the guys are saying, the first thing is to get that credit going now. And if you have any questions, feel free to put them in the chat. I can help you down the line. But Edwin, back to you.
Appreciate it. Thank you so much, Tyrone. The other thing I wanted to share with you is we also have, this is what we call BMO playlist. If you want additional information about credit scores, identity protection, auto loans, mortgages, retirements, budgeting, please feel free to scan this QR code, and it's going to give you access to modules. And each module is 5 minutes long, and it's going to be able to, you can play with it. It can give you additional information on all these topics. And again, if you have any additional questions about these specific topics, feel free to reach out to Erica, Bashir, and Carla. They'll be able to definitely provide that information for you guys. The other one I wanted to share with you is our BMO checking accounts. If you have any interest in opening, if you have an interest in opening an account with BMO Bank, we have partnered with the American Student Dental Association to be able to offer you a special program. We can offer you up to $500 if you were to set up direct deposit. With our accounts, some of our accounts do not require a minimum balance. Since there's no minimum balance requirement, there is no monthly service fees. So definitely, if you have any questions about it, please scan the QR code. It gives you additional information, or definitely reach out to Rashir, Carla, or Erica, and they'll be able to provide you additional information about each of our programs as well, too, or in programs and accounts. Now, at this point, what I would love to do is I'm going to provide you again, as I shared with you earlier, I'm going to provide you the information for Carla, the information for Rashir, and information for Erica. Each one has a QR code. If you were to scan the QR code, you can easily send them an email with any additional questions. Or if you want to know anything about our programs, if you want to know anything about more about our checking accounts, more about Practice Solutions, more about our secured credit cards, please reach out to them. They'll be glad to provide additional information. I'm going to ask Rashir, Erica, and Carla to come out and help me answer some of these questions. At this moment, what we will love to do is we will love to ask you if you have any questions for us. If you can please do me a favor, put it on your Q&A, and we'll be glad to answer some of those questions for you guys. So if you have any questions in regards to credit scores and reports, please type it in the Q&A, and we'll be glad to answer those. So Rashir, Carla, and Erica, if you guys can help us with those questions. I do see some questions from the group.
Evan, I can talk about a couple here or bring up to you. First one is, can you go over the advantage of having multiple credit cards?
So Rashir,
Yeah, I
Carla,
can start off. So yeah, I mean, there is advantage, right? Everyone of having multiple credit cards. I mean, especially when you're getting an auto loan or like mortgage or a personal loan, they're looking at trade lines, right? So we definitely recommend starting off early and start off with having multiple credit cards and paying them on time, because making payments on time is the biggest impact on credit. And as you use the credit cards more and more, usually the bank will increase your limit, right? And I would recommend not closing the credit card. I mean, I think there was one question that was asked before in the chat that if we're able to close the credit card if we're not using it. I wouldn't recommend canceling the credit card. Just leave it the way it is. But you just want to continue having multiple trade lines in order to have a good good standing of credit when you apply for bigger mortgages or bigger loans down the road.
Thank you, Rashir. You know what? Before you go over the next question, Rashir, I'm gonna give you guys a scenario about my brother. So my brother a year or two ago reached out to me and he told me he has two credit cards. Both credit cards have a limit of $6,000. On one of the credit cards, he owed a balance of $2,000. On the other credit card, he doesn't have a balance. So his question to me was, should I close out the one that has no balance since I'm not using it? Well, my answer to him was that you're currently using $2,000 of a limit of $12,000. So you're using less than 30% of your available limits, and that's what's helping you build your credit score. But if you were to close out the one that you have no balance, now you're going to owe $2,000 of a limit of $6,000. So now you're over that 30%. And that's when you start to find yourself that now your limit, your available limits is now you're using more than 30%. Now you're at 40%, 50%, 60%. So that's one reason why you need to consider before you start closing out some of these credit cards. As Rashir mentioned, most financial people will tell you not to close out a credit card because it can have a negative impact on your credit score. But those are all things you need to take into consideration as well too. So Rashir,
the next question is, how does student loans affect my credit versus having a credit card, right? So, I know majority of you will have student loans, right? I did too. As long as we make payments on time with student loans and try to pay that off as soon as possible, your credit score is gonna be affected, right? Your credit is gonna be impacted. Similar to credit cards, as long as you're making monthly payments on time, both are significant challenges when it comes to building credit and just helping you maintain credit, right? But yeah, student loans and credit cards could be hand on hand. You just got to make sure that it's the payments are made on time, because missing late payments and having late payments are probably the biggest impact on your credit.
I'm going to piggyback after Rashir's comments there. In credit, we also look at term loans. I think Edward mentioned this versus revolving credit. Credit cards are revolving balances, which hinder your credit score more than a term loan will, such as student loans. I've seen some questions here, how will my student loans affect me purchasing a practice? We at BMO understand that dentists are going to have student loans. It will affect your credit score much less having a large a large student loan rather than a large credit card balance. So just make sure you understand that we understand, and credit agencies, they understand that you will have student loans. Again, as Rashir said, make sure you're making your payments on time, because that is going to increase your credit. And if you have credit card balances, try to reduce those.
I see. Next question: how does your spouse's credit affect mine? I mean, as long as I think, if you're not co-signing, anytime you're co-signing anything, you have to remember, everyone, both of you it's affecting both of your credit, right? Credit score never stays the same. It always fluctuates depending on your monthly payments and how often you make your payments on time. But as long as everything is, both you and your spouse are making payments on time, and both are, liable for the debt. Co-signing is probably the biggest hurdle, and you just have to be careful on, making those payments on time, because if one's credit is affected, it's going to be both, right? Because you're co-signing the loan, right?
Hey, Bashir, I want to piggyback on that too. One thing is that when people are applying for mortgages, when married couples are applying for mortgages, sometimes they think that the spouse has to be in the mortgage, and that's not the case. So if one person has more than sufficient income and has a proper credit score, they can definitely be on the loan themselves when they're applying for mortgages. So just keep that in mind that the spouse does not have to be on the mortgage. You can still put the person on the title, obviously, but they don't have to be on the mortgage.
I can take the next question since it's directed towards me, but Jessica's wanting to know, what would it be considered a good credit score to purchase a practice, especially for those interested straight out of dental school or residency? Like I mentioned before, when you get on something like purchasing a practice or starting a practice, maybe you want to start up your own practice and you need money to remodel a location. We're going to require, and all banks are going to be like this, a little bit of a higher credit score. This isn't like you're just taking out a $3,000 credit card. This is, a $500,000 to $1 million of lending. So we are going to require a little bit of a higher credit score. So usually we're looking above 700. Usually 720 is where we want to be, but it includes some of the situations we've just talked about as revolving balances. Have you missed payments? All those things will factor in. And just to piggyback off of this, here at BMO, we usually want to see you having at least a year of being an associate somewhere so you can learn how to be in a practice, learn the dynamics of being in one. We will take one-off scenarios if you are trying to start your practice right after dental school. I guess please reach out to Carla or here, Erica, and get my information. I can kind of explain to you what we were looking for there. But again, you're going to want a little bit of a higher credit score than just the normal 650 to 700. You're going to want to be a little higher.
Thanks, Tyrone. So the next question, you mentioned getting a lower interest rate if you have good credit score. Is that regards for future loans and other credit cards? Yes. So, having a good strong credit score, everyone, it does impact your future loans as far as the interest, right? Especially student loans, right? I had student loans before, and sometimes I had to co-sign also with my parent as well, right? And it all depends on your credit score, right? Future credit cards you apply for, majority of the credit cards, right, everyone is 0% for either 12 or 15 or 18 months. But after those introductory period ends, it usually gives you a range of the interest, right, on the credit card. That all depends on what your credit score is going to be at the time you do the application, right? So having a strong credit score, in my opinion, and Edwin and Tyrone, you can speak on this, Erica, in my opinion, anything over 800 credit score is really good, probably one of the best. And I would say your target you want to be in is anything over 800, right? If you're in that category between 800 and 850, you're in a really good spot of getting the best interest rate when it comes to student loans and also credit cards or any other loans that you're going to apply for down the road.
Yeah, it takes years. I don't feel like you have to have it now.
The next question, when applying for a business loan, real estate, you need to have multiple lines. Yes, you do. So multiple trade lines is definitely a must, right? And this is why we recommend starting early, everyone, right? I remember when I had my first credit card, I believe I was 17 or 18, right? As long as you know how to manage expenses and make payments on time, start early and have those trade lines all set up. So when the time comes, you're all ready to go. You don't have to worry about, the interest rate and anything like that. So yes, business loan, auto loan, any big loans, mortgage, you do need to have multiple trade lines. The last question I see is, does a Canadian score count in the US? So I don't think it does. Edwin, Tyrone, you can speak on this. It does not, I think.
Great question. No, it does not. We definitely need credit score here in the US. But BMO is a Canadian bank. believe I see more questions coming in. So Erica,
Yeah,
or
so the next
sure.
question, how would you recommend creating a budget as a full-time student who relies fully on student loans? Yeah, that's a really good question, right? I remember my days. Having a budget is really important, right? Like writing everything down, right? Making sure that a penny to penny counts, right? And you just got to be consistent, right? When it comes to making that right payment on time. And I know with you guys, you're going to have a lot of student loans, especially the balance and the minimum payment. But having a budget in place is really important, right? I remember I was on a budget for almost 5-6 years. I had a student loans almost for 10 years. I paid it down in about 5 to 6 years, and that was just all creating a budget and just being consistent when it comes to making the most minimum payments that I can and making payments on time so my credit doesn't affect, right? Because student loans, especially you guys having a big balance, you're required to pay that minimum balance. But you can also work with that lender, right? And try to see if they can help you kind of with, adjusting the payment or not. Edwin, Tyrone, Erica, if you want to add anything on that.
I think it's having a plan is big, especially if you're still a student that doesn't have a regular, as we call W-2 job, where you're having recurring income. Have a plan, and everyone's plan is a little different. I think mine was in college having a T-chart where I had my expenses that I knew I was going to have and what my current incoming funds were, if you will. Everyone's a little different. I know there's a lot of resources out there. Take a look, try a couple. But have a plan is my biggest piece of advice.
The one other thing that I'm just going to add to that is that, yes, definitely have a plan. Everything Rashir and Tyrone said, making sure that we are paying out that debt. But at the same time, please don't forget about your retirement, making sure that we do put some money aside for your savings in your retirement as well, too. The one thing that I do when I work a lot with colleges and universities and high schools is I talk to them about how critical it is for them to start saving money at a younger age. You're going to see that accumulate a lot more in the long term as well, too. So definitely paying off that debt, but don't forget about your saving money on the side for your retirement as well, too.
I see another question. You mentioned employers can ask for your credit reports. Do they get the full report or just a score?
In some states, they do get the report. I'm not quite sure what kind of report they get. Here in Illinois is not a requirement for your credit scores. But what I will tell you that in some institutions, for example, in banking institutions, they do take a look at our credit score. Now, what kind of information did they take a look at? I'm not 100% sure what information they'll take a look at. I'm sure that I know they look at your credit score. I don't know if they only look at your credit score, or if they look at the entire report. I guess it depends on what you sign up on.
Yeah, and I think it also depends on like how well of a good standing you are. That's basically it. I think in the credit score, I don't think they're looking at really, really detailed credit report, but you just have to be in a good standing, right, when it comes to credit score. And as I mentioned earlier, right, everyone, like, you got to start early. The earlier you start, it's really critical. So
yeah, it depends by state. Sometimes they can give you. Sometimes they'll pull just a credit report that may not even have your credit score, but will have details about your full report, such as missed payments, such as delinquencies, such as some of those negative aspects. So may not have the exact score, but it'll still pull a report with those details.
I think I don't see any more questions in the Q&A.
We'll give another 30 seconds
Yeah.
to see if anyone else has additional questions. Well, I just want to say thank you, everyone. Thank you for having us here. We're super happy to be here and share this information with you guys. If you have any additional questions, please feel free to reach out to Carla, Rashir, or Erica. I'm sure they'll be glad to help you out. any questions you have, please reach out to them. I still have their information in the screen. I have their QR code along with their email and their phone number. They'll be glad to provide you any service. If you want to also talk to Tyrone, please reach out to them, let them know, and then they'll definitely put you in front of Tyrone as well too. Linda, Chris, I'll bring it back to you guys. Thank you so much for
Thank
having
you.
us.
Thank you, Edwin. And on behalf of ASDA, we want to thank you for participating in tonight's webinar. And thank you to the entire BMO team for your engagement, for your intellect, and for sharing of yourselves. For additional information from BMO, as Edwin has said, please use those QR codes on the screen. And then also, if you'd like to review this webinar again, it will be posted within 1 week on ASDA's YouTube channel. So you'll receive a notice about that. And it'll also be saved in the webinar directory online. So again, thank you all for joining us. You have a wonderful evening.